All right, live on YouTube. It's very cold here in Texas. It's supposed to get down to like 10 degrees tonight, man. Crazy, crazy. Chapter 10 of The Science of Getting Rich. In the book, chapter 9 and chapter 10 are both about the use of the will. A lot of people miss this, but the secret to the book Think and Grow Rich and the book The Science of Getting Rich isn't the manipulation of others or trying to get other people to do something. That's kind of what's taught in a lot of sales courses, right? We're trying to get other people to do something, which is part of sales for sure. But the secret behind those books is tricking yourself. So in The Science of Getting Rich, there's 2 chapters on the same thing, which is the use of the will, meaning willpower, your own personal will, right? So the person you're trying to change is you. It says, the beginning, chapter 10, you cannot retain a true and clear vision of wealth if you're constantly turning your attention to opposing pictures, whether they be external or imaginary. Do not tell of your past troubles of a financial nature, if you've had them. Do not think on them at all. Do not tell of the poverty of your parents or the hardships of your early life. Do not in any of these things, to do any of these things is to mentally class yourself and identify with the poor for the time being. And it will certainly check the movement of things in your direction. That's why sometimes people say, Gerald, what about this cause? And you say, why aren't you into it? It's not that it's not good or bad. I have a book that I follow. And in that book, it tells me not to waste any time thinking about such things. Why? Because I'm trying to get rich. And if I identify with, feel sorry for, mope around with, or hang out with the poor, right? It pushes the blessings that would come my way away from me. Now, not everybody can get behind that, and that's cool. We don't have to agree. That's the beautiful thing about America. At least it used to be. We can agree to disagree. So my focus is on that. And the best way I can help them is to get rich. The best way you can help everyone around you is to get rich. That's how you really help people. So let's back this up, man. When we're talking about trading, let's pull up a stock chart. When we're talking about trading, trading can help you in your buy and hold account as well, right? Most of the time when we're talking about trading, we're not trying to get rich in trading. What we're trying to do is just make money and then take that money. I am live on YouTube, homie. I'm trying to take that money and invest it so we can get rich, right? Let's pull up the Dow. And let me kill these comments. We're on YouTube as well. And so what we're trying to do with trading is make sense of price movement. The problem is there is no sense to be made. You know, it's imperfect. It's chaos. Price movement is just the emotional whims of people. So on this day here, you know, the Dow was up 0.36, so 0.11%. I mean, that's the emotional makeup of the players that day. It means nobody was really scared. Nobody was really greedy. Everybody was just kind of there, which you'll see that. You ever notice that going into a holiday, like it kind of just goes flat? Why? Nobody's emotionally involved. See, emotions are what move the market. Emotions, not facts. And I see this a lot in young, especially smart people. And I'll say this, you'll hear me say this a lot. The hardest people that have a hard time trading and investing is smart people, because they think you can just sit back and fucking analyze everything. Problem is you're dealing with human beings, and human beings don't react to logic. So what you think is a logical response to XYZ, right? That's not how the market works. People don't see things logically. If they did, everybody would be fucking perfect and rich, and they're not. They wouldn't eat fucking cake. They would all be in shape, doing the right thing all the time. But human beings don't do that. That's not how we're built. We do shit that's bad for us on a daily basis. People know things are bad for them, still do it. So if you're really smart and you try to look at everything with logic, the problem is the rest of the people aren't using logic. That's why logic doesn't always work. Now, the market's trying to get there, and so you'll see the market do crazy swings trying to find, well, something that makes sense. So when we look at a stock like a Groupon, and if you back it up, over 6 months, this is 6 months of price movement right here, right? So as a trader, this is important. This is big picture thinking. You've got to understand this. The markets don't care how smart you are, or what color you are, or how much fucking money you have, or anything, or what college you went to, or any of that bullshit. They don't move based on any of that. You have zero advantage if you're smart. Zero. You have zero advantage if you're dumb. It doesn't give a shit. Doesn't care if you're male or female, or that you don't know or you do know. It is an equal opportunity. It will steal your money or give you money. Doesn't care if you're 16 or 85. It doesn't care at all. It just is. And it just moves. And it's not fair. And it moves too high and it moves too low. And it moves based on fear and greed. And so a lot of times when I get new traders, they're like, I don't understand why it did that. You're not supposed to understand. It's not understandable. The moment you understand that it ain't going to make sense, then you stop trying to make sense of it. So what sense is it that Groupon, in a 60-day period, you're telling me the company value went from $20 to $40? That in 60 days, they did something that made the value of this company double. Come on, man. No. More likely, when it dropped too far. And now it's run up, and look what's happened. And we're going to talk about resistance. We're now hitting resistance, right? Which is pretty close to where it was hitting it before. Why? True value. This company's now overvalued. This is the value of the company. Now, it could go higher. It could go higher. But we're going to need some sort of catalyst, something that makes it seem like it's worth more money, right? But you see this massive swing. This is why we can make money trading or investing, is we can watch these swings and wait for price to get out of whack because of emotions. And so if you're using logic and you come down here and you go, man, that doesn't make any sense. No shit. No, that's exactly why we can trade. Nothing makes sense. And so we're looking for these imbalances. And this is how we trade. So again, one of the problems you'll have with logic, and I get this all the time, Gerald, don't you think we're due for a crash? I don't know. What if we are? Like, worrying about that will add zero value to your trading or your investing. It adds zero value because let me let you in on something. Nobody knows when it's going to happen. If they did, all the economists wouldn't have jobs working at high schools, colleges, and for the government. They would all be rich and ballers, and they're not. And they know more about the economy than you do. They've spent 10, 12 years studying government reports, GDP production, business cycles, and then a guy who's been in the market 3 months has decided we have a bubble. And he's using his logic because he's a programmer, or he's an insurance salesman, or he's a doctor, and somehow that translates to now he's a fucking market expert. Because he's smart, or she's smart, and they think they're smart. And they see bubbles, and there's too much, and there's concern. You know what all that is? That's you putting your fear, because you live in fear. A lot of people live in fear, and they won't admit it. And they live in fear. And so they project that onto the stock market. See, the thing about the stock market is it'll give you whatever it is you're looking for. So if you're a fearful person, you're going to see fear everywhere. Go. Sorry, I got a cat problem. So whatever it is you believe about life, you're going to find it in the stock market. So I have zero tolerance for it. Don't want to talk to you about it. Don't give two shits about your end of the world and the collapse because it doesn't help me trade. Okay? I only want to talk about shit that helps me trade. I don't fear collapses. I fully anticipate markets come down, markets go sideways. And so, this is the pattern that I teach right here. This is a perfect example of the money flow trading system, is I'm looking for patterns like this. But not just the pattern, you got to understand the pattern. Why is this pattern happening? A lot of people think, they read the book a couple times, oh, I got it. You ain't got shit. It takes you a good 2 years to learn what I'm teaching. You might have the 4th grader version. I could teach a child to draw a box on a chart, okay? That doesn't make you some stock market trading guru, right? There's still the part about what stock to trade. Why? Where are we at in the business cycle? What sector is it in? Work. So this is what we're trying to bring to it. It's not superficial. There's a reason for why we're buying certain kinds of stocks. Why are they undervalued, right? What's going on? Where are the rest of them? Support and resistance, all the little gray areas. Which one should you hold into a sell-off? Which one should you sell? Like, it takes time. It takes time to manage and develop. This right here, I could teach you in 5 minutes if you'd open your mind. This part is the easy part, okay? It's maintaining a portfolio. It's actually putting money into your account, right? That's the hard part. And then trading it and dealing with the emotions of the stock market. Because a lot of you have some fucked up views about the world, and you bring all that shit into the stock market, and it's going to hurt you, man. Or you come in here greedy like it's a casino, and then you don't do any portfolio management. You think GameStop is cool, and that trying to make it big in one trade is cool. And it's not. Like, that's not trading. That's a trade. It's one single trade, but it's not a lifetime of trading. So the secret to coming in here and trading successfully over a long period of time is deciding right now, I'm trading for life. That's half the battle, man. Because you're going to run into times where everything's going to break down. Shit's not going to work right, that we want to determine that we're trading for life. If we back up, let's back up Groupon too. Well, hold on. So look at Groupon here. This is a monthly chart. This is an ugly ass chart too, man. So look at this chart. Basically straight down. See that? Terrible. Terrible, right? But if we go look at the general stock market on a monthly chart, look at the Dow. Let's put the Dow on here. Looks a little different, right? And this is why people will tell you, index funds, and because index funds work. Why? Because over time, markets just go up. But not every stock inside of the market goes up. So I just showed you that Groupon traded the pattern perfectly. But if you back up to a monthly chart, to a big picture chart, it's a horrible looking chart. It's gone straight down. That's trading. That's trading. This is investing. Like, buying and holding the stock market's a no-brainer. If you bump into people who don't believe that buying and holding the stock market's a good idea, you're talking to a stupid person, okay? I don't have any other words for it. I mean, and I hear a lot of famous gurus doing this. The Cardones. Oh, the stock market's dangerous. Now, this is a chart of the last 12 years of the stock market. So when you hear people saying this to you, and you got the Peter Schiffs out there, and you have all these fear mongers, and you go back and look all the way back to 18 whatever, this is what you see. And yet there's people that fear it. Look, periodically, this is COVID. This will disappear to history as just a tiny little blip on the giant scale as we move forward. So if you're listening to people that are anti-stock market, these are just dumb people. I don't have any, they may have degrees and went to college and did whatever. They're just dumb people. So we're trading, we're playing a game that over time goes up. This cat's driving me crazy. So do you see the advantage we have now when we come to trading? Now we just got to find stocks that do our pattern where the big picture's going up, and then can we identify these little dips without overly worrying about them, without constantly fearing about them, just understanding that every so often the market kind of dips. And if we take this into a weekly, these are just called pullbacks. These are completely normal, okay? Complete. Now, this one here, here's the problem. The COVID crash, let me let you know something, is not going to happen for a very long time. You are not going to get that again. And a lot of you, not a lot of you, but a lot of people, I don't know about you in particular, are waiting for this to happen. I watched this phenomenon. I've been trading 20-something years. In 2003, during the dot-com crash, everybody waited for a dot-com crash to happen again that never happened. We went a whole nother 10 years. And right now, you're going to have a whole bunch of people that are waiting for the economy to collapse again. Why? Because people are always waiting for what happened last time. They get stuck in the past. We may never do this again, or we may do it, but it's about once every 10 years. But that would require people to study history, and they'd rather just have negative opinions on life than actually study life and when does it actually happen. About every 10 years, you have a complete collapse. And all it does is fall down real low, and then it turns around, and then it comes right back. That's what happens in every single one of them. 2008, 2003, 1986, what was it, 97? Like, this is what happens. It just whoop, and then it comes right back. Why? Because it goes too low. We got a little indicator here. It helps us. It goes too low. So what does that do for us as traders? Sets up for buying opportunities, right? But it also sets up as investors. So the point being is this, we back up and we look at this. Why is this super important? Because it gives us a foundation upon which we can have a philosophy that we can come into the market and trade with a philosophy. And so one of the things you should start doing as a student of the market is not worrying about options and other dumb shit. It's learning about how the markets move, the history of the market, right? How do brokerage accounts work? What are market makers? Right? What's the difference between day trading, swing trading, options trading, futures? What is a bond? What is gold? What are commodities? Like, you can spend a long time every day learning something more and more and more and more and more and more. You can just keep learning. Every day I'm studying and reading and studying all about different asset classes and electric cars and battery companies and, all the different sectors and classes, right? But when marijuana stocks got hot, everybody wanted to trade marijuana stocks. They didn't know jack shit about anything else but that. Mostly as a bunch of weed smokers who just turned old enough to be able to put money into the market. And so they just want to buy weed. Now, during all that, now weed stocks got hot, right? Like, now they're hot again. Why are they hot again? That's how the market works. Shit goes too high, and then the shit goes too low. And then it goes too high, and then it goes too low. And in the midst of that, people get married to these ideas and themes. They get married like a religion, like it's a religion. And they get stuck on sectors, And so as traders, we can't do that. We got to watch what we're doing, man. We got to manage our money. So if we come over here, how could we have known, the marijuana sector just got real hot, right? You say, Gerald, how could we have known? Well, this little green line right here. This little green line here is called the 20-day simple moving average. And the entire money flow strategy is kind of, I don't want to say built around it. It's really built around the 4 stages, okay? Now, the 4 stages, let's pull this up, is what the strategy is built around, and is what you saw on Groupon right here. This is how I interpret all price movement around this pattern. And in my buy and hold, I often get asked, hey, Gerald, what do you think about Apple? Or what do you think about blah, blah, blah? And if it's one of the big 100, you can just buy them. Like, if you just buy it and hold it, it'll go up. That's what the stock market does. It's not genius. If you buy Apple and just hold it, it goes up, okay? But that's not trading. That's not trading at all. That's buy and holding, which I love, but that's not trading, okay? That doesn't need a big conversation. You just buy and hold it. Like, don't overthink it. But as you own and hold Apple, it's going to go through these 4 stages. Now, it may do it on its own because they miss earnings and the stock sells off. It may do it because the entire market sells off. The S&P 500 rolls over. Well, guess what? When that happens, Apple's going to roll over. That's how it works. So in the index fund, which you'll hear me call it the wind, meaning if you have a sailboat, you need wind. Well, the market is the wind. The breadth of the market is measured by, technology is measured by the QQQ. The general market's measured by the S&P 500, right? Oil's measured by an oil index, gold by a gold index. And if you own gold stocks, they're not going to go up if gold isn't going up. And if you own oil stocks, they're not going to go up if oil isn't going up. And so we can look at what stage something is in. So if you wanted to buy something, don't you think it'd make more sense to buy it on a low stage and then sell it on a high stage? That's called trading. And so as we come in and we can look. Now, some will do runaway patterns, right? They'll do runaway pattern. That's what you see here. This is similar to like a Tesla chart. These are runaways. And so we need a strategy that keeps us in the runaway. Money Flow does that pretty well. Now, if you'll notice on this pattern, you're going to see these little circles. A couple things are happening on these circles as you look at more and more charts. You're going to see price going sideways. I call it a box. Some people call it, consolidation, zones of accumulation. Call it what you want to call it. Sideways is prices being accumulated on the bottom. And on the top, it's what they call distribution. Shares are being sold. And then all of a sudden, a whole bunch of people start selling, right? So we got stage 1, stage 3. Now, you can't call it, and this is one of the things as I teach this, people are like, oh, we're in a stage 3. Maybe. Like, we actually don't know that until the stage 4. Stage 4 confirms the stage 3. Stage 2 confirms the 1. You say, well, what do you mean? Meaning, you don't know, man. Like, nobody knows. You don't know where any stocks are going to go. Nobody does. Anybody thinks they do are just guessing or stupid. They don't know. I don't know either. I have no idea. But I know what they look like before they break out, right? And then I can see something happen, and then I can say, okay, cool. This is now a breakout. That's a stage 1. Why? Something happened to confirm it. In other words, you were married, now you're not married. Or you were engaged, now you are engaged. Something happened to cause it, right? So this accumulation is confirmed when price breaks out. Now, we can make a guess. We can guess that it's doing that. We can see what it's done in the past. What does the stage 3 look like, right? We can start to see that. So if we're looking at Groupon again, just because it's such a clear one, and if you step over here, bring this down a little bit, you're going to see the pattern very, very clearly. And this long term, this is not a good stock. Go look. It's just been going down, down, down. See the boxes? These were clear stages. Stage 3, stage 4 decline, right? Stage 1, stage 2 breakout, stage 3, stage 4 decline, and then look, stage 1. You see this pattern playing out? And so the pattern is playing out just like it does here. Sideways up, sideways down, sideways up, sideways down, and you'll see it playing out. What we don't know when we're looking at this pattern is we don't know how far down it's going to go, and we don't know how far up it's going to go. Now, you'll find people who think they know. These are delusional people. A lot of people lie to themselves. I get it all the time. Gerald, you got to get this stock guaranteed going to 500. Guess what? When you send me that, I fucking delete it. I don't even look because you're delusional. You started off the conversation wrong with me because you don't know that. You can say, hey, with all my research, I really think this is going up. But the moment you start talking to me with certainty, I have to avoid you because you're not actually certain. You think you're certain. I know you're not certain. You want to avoid extremist people. Now, you may say, hey, I did a bunch of research. I think this thing's a good potential. This thing could really go high. That's different than saying this is in the bank. This is guaranteed. I know this is that's delusional. So I don't know that. I know that price moves in 4 stages. And so if I see something that's a stage 1 that's super undervalued, that's a catalyst for it going higher, making a stage 3, right? Yeah, guys, I'm going to have to kill this cat, dude. Why don't you go outside, man? Go play in the ice. It's 20 degrees. He'll be all right outside. Fucking cats, man. About done with this. That new cat I have about done with this thing. So as we put all this together, see this green line? And what you're going to notice, see price breaking above it? See price breaking above the box there? That's what you're seeing on this pattern. Now, if you caught the live that I did with Ashton, he's another young trader that I'm friends with, trades a very similar strategy. We were talking about, oh, now he wants in 20 degrees. He doesn't like that. Yeah, I didn't think you would. Go sit the fuck down, dude. If you were on that live with Ashton, me and him did, I think it's off by, and we were talking trading. One of the things that we talked about, and I'm a huge proponent of this. I think when you're brand new to trading, now there's exceptions to everything, but if you're brand new to trading, I wouldn't spend a lot of time trying to find new stocks. Now, there's some people have a natural knack at this, and if you do, that's cool, okay? Let me give you an example. So these are stocks that I follow. Come on, dude. What's going on with my computer here? So these are stocks that I follow every day. Let's click view all. I hope you're using stock charts correctly. Like, spend some time. Like, learn the platform you're doing. That's part of your learning too, right? So if you come over here, you'll see at the top means there's 10 in each of these groups. So there's about 200, you know. Sometimes you'll hear me say 50 and 60. If I tell you what I really do, you'll be like, oh, that seems like a lot. So I kind of tone it down, make it seem. If we look at this chart here, what do you see? Just a bunch of bullshit. It's just going sideways, right? This is very difficult. Now, you might could call this stage one. Look, you might could call these little tiny, but this is untradeable, right? So as I come down, right? So as I go, there's Apple, right? We go through. I mean, that's not jumping off at me. It's above the 20, but I don't see any good trading patterns there. So as I go down, right? What am I looking for? These are companies that I follow all the time. So rather than spending a huge sum of time looking for new stocks, you could, as you begin to follow the same stocks, guess what you're going to start to figure out? Different stocks are in different sectors, right? So here's one right here. As I look at this chart, I'm just grabbing one randomly as I'm going through this, okay? So let's see. Stage one, right? Stage three. Now I'm seeing a stage one. Now it's not perfect, but as I'm watching this, right? There's a breakout. There's the breakdown, and now it's going sideways, and it came right into support, right? Which is what we teach. That's the pattern, right? Sideways up, sideways down, sideways. Now I just grabbed one randomly. So it's moving sideways. There's your breakout day, right? Now, if I can go and figure out what this company's worth, that's research, things like that. Now, I've showed a way that I shortcut some of this. It'll at least get you on the right track. If you go to tip ranks, I know you'd have to spend money on it, actually give a fuck about making money. I know. Let's see. They got a $7 target, 178% upside. Now, it's not tip ranks. It's these people. This dude works at H.C. Wainwright. Here's an idea. Go research what the hell is H.C. Wainwright. What is that? Right? What is this? What is this? What is Credit Suisse? Well, as you go look, you can look and you can see these ratings and, all right, this guy doesn't have the best success rate, right? Well, this guy doesn't either. So, I don't know. I'm not overly whelmed with these guys here. I got a better rating than they do. But if I'm picking this stock up at $1.03, and they got a $7 target. And I'm seeing the pattern, right? I'm seeing the pattern emerge. It's not clean. It's not as clean as Groupon, but it's emerging. And now we're breaking out. My first target's previous high, right? We'll talk about that. Do you see? So what I'm observing as I'm trying to trade is I'm looking for a. Now, if you go look, this is a pharmaceutical stock. Well, guess what? Let's go look at other pharmaceutical stocks. Maybe there's some other ones doing that, right? Remember? So I put out Z-San. Let's see. Bam. That one's moving up. So as we go through, well, that was a bad example. But you can go through and you can find and say, okay, wow, these stocks are breaking out in this sector, right? And as you follow, like I was doing, I was following that stock, right? Let's go back to the thing. All of a sudden, because I follow this one stock, and I probably follow more than one pharmaceutical, now I know that sector's getting hot, right? So I want to go look at maybe some other stocks in that sector. So this is the advantage to always following a particular, following the same stocks over and over and over and getting to learn their movements. Look at this, though. Look at this support and look at this resistance. If you have my book, The Money Flow, you know this is one of the 6 components of the money flow trading strategy, right? Look how clear this comes up. You see price bouncing here? See, it's just stuck in this little movement here. This is not an ideal chart. This thing is stuck. I don't like this. Do you see the movement of this compared to Groupon? Do you see that? If you catch what I just showed you right there, the flowing movement that we see happening here versus what we see over there in Amgen, or was that Adobe? You see the difference? Big difference, right? Now, you could be a trader. There are trading styles that buy here and sell up here, meaning they look for these patterns and they trade them, okay? That's not what I do. So I don't give a fuck about that trading style because that's not what I do. So I try to master what I do. I'm not trying to change what I do from time to time or to change what I'm doing to fit this chart. You know, fuck that stock. We'll move on to another stock. I'm looking for stocks that are going to do the pattern, okay? And so as I go through, I'm looking for stocks that I follow that do the pattern. They've been in a beautiful uptrend. Nope. Look at this crap here. Look at Amazon. Jesus. Look at this. This is not tradable. This is untradeable right here. There's nothing there. It's just up, down, up, down, up, down, up, down, up, down. You see how the moving average is sideways? Terrible. Now, it doesn't mean it can't break out and run. And if it broke out and ran above here, you know, maybe I get involved. But as a trader, there's nothing here, man. There's nothing that I'm looking for. Not inside of the money flow trading system. Here's another one. There's nothing there. Look, it's all sideways. It's basically the same price that it was 5 months ago, right? It's just not moving. That's not the kind of charts we're looking for. So as I come down through here, like there's another terrible one. A lot of them are just terrible. That's not what I'm looking for. Uh-oh, now we got something. What? See this big move down, and now we're starting to go sideways. What do we have? We're looking at this side of the pattern, right? So we could see that the pattern forming right now. Big move down, and we started to go sideways. So what kind of stock is that? Then I would go look. What sector is it in? And go look. Are the other stocks making a similar pattern? If they are, now we might have something, right? So a new one that I just put on was Merck. What are we seeing with Merck? Well, it was in some consolidation here, right? But look what we've done. We've had this big move down that stopped where? Previous low. So let's see. And we appear to be forming a box. Not for certain, but we appear, which we'll just fast forward. For me, is 4 candles where price holds a bottom and then it goes sideways at least 4 days, right? And what am I also looking for? Now, we hadn't gotten into this, but this is the MACD histogram. So if you have my book, you know this is one of the 6 components. I like to see it ticking the opposite direction. So as the histogram ticks, next step is going to be this stochastic's going to break out, and we're going to have a breaking move out of the box. Now, this box may take a minute. This could take weeks. But if you go look at the pattern, right, we have a big sell-off coming into support, right? And if we go down the list, we're checking the list, 5-day, 10-day, 20-day RSI, support and resistance. So what am I looking for on the RSI? I want it to be in an extreme at the stage 1. What am I looking for support and resistance? Is there a support zone there, right? What am I looking for in the MACD? Is it diverging? Is the MACD telling me that price has stopped dropping? And so what am I looking for? What am I seeing? I'm seeing all of that shit lining up. Is it 100% yet? No, it won't be till it breaks out. It won't be till it breaks out. So as we move sideways, and we see this moving in, I'm going to start to add to the position. We're going to add. Now, I always do previous high as my target. Why? That's where price has been before. So one of the main concepts inside of trading and the money flow trading strategy is this idea that price has memory. What does it mean? It means it's been there before. So we're not asking it to do anything hard, just saying, hey, go to where you were before. Not complicated, right? Super simple. We know it can do that. Did it here, 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 here. We're not asking for a lot. We're going to catch a 20, 30% move if it just goes back to where it was last month. Is it possible that Merck could go back to where it was last month? Let's see. What is it worth? Right? That's how you determine it. And again, we're just doing the rough. So they say general analyst consensus is $94. Now, we don't know if it ever gets to $94. We don't need it to get to $94. I need it to get to $83.50. So you say, well, those analysts are wrong a lot. Good. They can be wrong. Maybe they're wrong and it's only worth $84. That's all I need. That's all I need. I don't need $90-something, right? So that tells me there's room to the upside. So as I'm seeing the pattern emerge, and this one isn't as clean, but it is there. We're coming in. Now, the other thing got me excited, if you listened to me long or traded with me, we went below the 200. That's what I call bread and butter trade. This is a quality dividend stock that now has fallen below the 200, which it is attracted to this 200. This is a no-brainer that it's going to hit the 200 and then, hopefully continue on. So that'll be my first target and then the second target. So I have an entry. So for trading, you got to have what? A trigger. If you're a trader, you need something that triggers you to buy, right? It can't be because some idiot on some forum somewhere posted that we're all pilot. Dude, if you're doing that shit, you just need to go look at yourself in the mirror and say, I actually don't know what the fuck I'm doing. Like, I just follow random complete strangers on the internet into stocks. I actually don't know what the fuck I'm doing. If you could, that's like half the battle to beating alcoholism and drug. It's just saying I'm a fucking addict, okay? So if you're just going and seeing forums like Wall Street Bets and shit like this, and you're literally buying stocks because a stranger posted that it's a good buy without any research, without any due diligence, without any kind of strategy, you are a complete moron. There's no other excuse. Like, you have to stop doing that. You need to have a trigger. Now, there's nothing wrong with seeing what they're trading and then using your trigger. So you need a trigger that tells you, this is when I buy. So when I see a stage 4 decline, cool, I'm watching this. As soon as they broke under the box and goes down and then down and then down and then down. So here's my trigger. Now, I've been there. All that shit that I'm saying, I did that shit. I lost so much money over the years doing that. All this came from me losing money and doing just completely stupid shit. Okay? And smart people do the dumbest shit. The smarter you are, the dumber the things you'll do because you think you're being smart is going to help you. So this indicator here tells me or gives me insight that maybe price has gone too high, maybe price has gone too low. And it really doesn't matter what this is doing unless it breaks above or breaks below. And when it breaks below and above, you're going to see a little color. Up here, you'll see green. Down here, you'll see red, right? You'll notice over here, you saw green. Okay, now this thing is not 100%. These are all signals. And we're looking for basically 6 things inside of the money flow. When all 6 line up, you've got about the best thing you can possibly have within a world of uncertainty, okay? Kind of like playing blackjack and you get dealt 9-2 and the dealer's got a 5. Doesn't mean you're going to win, but that is a hand you double down on, right? Why? Because you have the odds in your favor. That's what this is. That's what this is all about. So whenever I see green, I get nervous. Doesn't mean it's not going to stop going up, but I need to lock in some gains. And whenever I see red, I start to look for a bottom. Now I'm looking for a tradable bottom if my pattern is there, right? Now, another thing that I'm looking for is support and resistance, right? We talked about that. Price has memory. What do I mean? Well, where it stopped before, just like I talked about on the upside, I'm going to be looking for price to stop right around in here. On the downside, I'm going to be looking for it to stop right around where it stopped before. That's called memory. That's how you get support and resistance in trading. In every trading book you ever read, they're going to talk to you about support and resistance or supply and demand, whatever you want to call it. Well, guess what? Right here, buyers step in. Why? Because it's undervalued. It's undervalued. That's why they're stepping in, right? You get what I'm saying? So as we now can set targets, logical targets as traders. If you're an investor, doesn't this look like a good place to buy? RSI's on extreme down here. Doesn't that look like a good place to buy? Of course. So let's look at a good one. This is one that I was buying for my buy and hold account. Coca-Cola. Now, people always ask me, does this work for buy and hold? I don't know. Does price movement work for buy and hold? I get that all the time with options. Does the money flow work with options? I don't know. Does knowing where price may go help with options? Yeah. Like, you get what I'm saying? Like, yeah, it helps. So as I look at this, the pattern wasn't great, right? But I see some support here. Every time it gets down here, it's stopping. So we could project that out, right? And look, we're seeing it, obviously there's resistance in here. Ignore these little one-up days. This is your resistance level. And then it's breaking down. So we have the pattern emerging, just the left side of the pattern, right? Again, we see a sideways, we see a down, now we're seeing a sideways. So as I'm looking at Coke and down, I get that question all the time, dude. Will this help with options? The fact that you're even asking me that tells me you should not be trading options, because I can't think of any other thing that would help better with options than price movement. I mean, I don't understand the question. You can only make money with options if the price goes in your direction. Unless there's some other way, And if you know the other ways, like condor spreads and blah, 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 then you're probably not asking a guy like me. You're already way past what I'm doing. So, of course, it helps you with anything that you can break down the 4 stages of price movement. So you see how with this pattern, all of a sudden, I'm making sense of the chaos of Coke going up and down, up and down, up and down. All of a sudden, I have what? A box. Uh-oh. And if we draw the line, prices stopped in this zone before. There's another box. So we've had buyers, these little dips that came right back. See the little dip came right back? And if you follow my strategy, that's the most bullish thing in the market. So these bottom ones don't really matter because it dipped, came back into the box, dip came back into the box. So as I draw a line out from my box across, look, these zones all start touching. That tells me this is a zone of interest. This is where people are buying. It also happens to coincide landing on the 200, which is even more of a bonus. Can you apply this strategy to crypto trading? I don't know. Can you apply price movement to crypto trading? Can you apply price movement to crypto trading? If we're just going to ask dumb questions, let's just keep asking dumb questions. Will this work with gold? I don't know. Does price movement with gold help you with gold? What about oil? I don't know. Is price movement with oil help you with oil? You get what I'm saying? Like, I don't know. Does understanding the value of a house help you buy houses? I don't know. I mean, come on, man. Of course. It's not like the people that trade crypto are different human beings. They're dumb shits like everyone else. They get emotional. They sell their shit off every time there's a thing. They get panicked. They buy it when it starts going up. Now everybody's talking about Bitcoin. Why weren't they talking about it 5 months ago? Like that's when it was on sale. Why they want to buy it now? Because it's going up. Why they want to buy it now when it's going up? Because it's greed. Fear and greed move markets, not logic. Fear and greed. So guess what? Crypto gets on a run. Guess what? It's going to go on a run. It's going to keep going on a run until something happens that causes it to turn, right? Whatever that'll be. Whatever that'll be. So as we watch this, we see the pattern emerge. We see the pattern. Look at this box here. Remember I talked about breaking out above the green line. Where's my target? Previous high, right? So not a big move. This is not a trade you do with a small account. This is not of course it's the same because it's human beings. I know we all think we're special and we think our kids are special. Oh, little Johnny, he's special. He's just a kid, man. And me and you are just people. And we all respond to the same shit, fear and greed, fear and greed. And that's what moves markets, all markets. Forex market, bond market, gold, oil, stocks, fear and greed. Boom. So can Coke go to $54? Is there a possibility? Is there one analyst on planet Earth that thinks it's worth $54? Whoa. Looks like everybody thinks that. All right, cool. I only need 54. They got 57. Cool. That gives me a little room, right? That gives me a little room. So as a buy and holder, I want to buy here, not up here. This is not a good place to buy. Why? Because if we go look at tip ranks, it's only worth $57. So this isn't a deal. This is not on sale. I want to buy down here when it's on sale. That takes patience. It takes patience to run a portfolio and not buy stocks. In other words, I don't want to buy them when they're overpriced. So if I'm running a portfolio of like 40, 50 stocks, as I put new money in, I'm looking for opportunities. I'm not looking to buy the shit that's overpriced. I'm looking to add to the things that are overpriced. I'm looking to sell the things that are underpriced, or the other way around, I mean. So BX is one that I've held that's in my buy and hold. I shaved a little bit. Shaved a little bit up here. Why? Look at the RSI. One, it's banging. Two, this thing has gone so high that it's now become too large in my portfolio. So when do I want to kind of rebalance a little bit? Well, when it's overpriced. So let's look and see, what do they think BX is worth? $71. They think it's worth $71. Now, I was buying it in the 40s. Why? Because it was cheap. Now it's about value. I mean, maybe a buck or two. But what could I take some of this money and roll it into? Maybe Coke, because Coke is in my portfolio. It's undervalued. This is fair valued. So I could shave a little bit that I bought way back here when it was cheap. So you see how I begin using the money flow inside of a buy and hold portfolio too? Oh my God. Oh my goodness. Oh my goodness. Man, what I just broke down there, you're going to have to contemplate on. It'll mess you up all day. You'll be walking around thinking about that. So let's see. Let's see. All right. I gotta kick this motherfucker out, I guess. There we go. Let's see. What's another one we were looking at? Merck. We already looked at Merck. So let me check my, I'm getting old, man. Let's see. If you don't know, I keep a trading log over here. It's a little delayed, obviously. But these are some of the things that I'm trading right now. Let's see. Added to Clove. Shebay. Added to Rome. I probably jumped the gun a little bit on this RMO. Let's see. open, mer, close, CBay. Yeah, let's look at some of those. Let's pull up. Don't worry about taxes, man. Oh man, so can you explain taxes to me? No, people always do that in trading. They never do that in a job interview. Nobody ever goes in the job interview and goes, hey, before I take this job, can you explain taxes to me? Yeah, you got to pay them. You just Google it. It'll tell you all about taxes. Nobody wants to sit around fucking talking taxes with you. Like, that's boring. Just Google that shit, man. All right. Now, this one may not jump off as obvious to you. But I want you to try to see it. Some of them you got to look for. Some of them don't work the 20 perfectly. But what I'm looking for, when I first look at a chart, trading versus real estate, that's a stupid fucking question too, man. That's like saying bubblegum versus steak. Or Coca-Cola or would you like some wine? Like, they're two different things, bro. Why would it be one or the other? Like, I own a bunch of real estate. I own a shit ton of real estate. What the fuck does that have to do with trading? That's like saying, should I do Pilates or weight training? Like, they're two different things. Like, you can do Pilates and do weight training. Like, they're completely different fucking things. Should I ride my bicycle or take the bus? Like, I don't know. What do you want to do? Like, they're different things, man. They're not the same thing. It's not even a comparison. Should I work a job or should I drive for Uber? Like, you can do both. Like, it's not a comparable thing, man. It's not one or the other. Trading stocks is trading stocks, man. Should I go deer hunting or go fishing? You can deer hunt and fish. Like, if you don't like fishing, don't go fishing. If you don't have an interest to trading stocks, don't trade stocks. Like, it's so simple. If you only like real estate, do real estate. It's not a one or the other kind of thing, man. Fuck, I don't even understand questions like that. It's like why be so limited? Why are you so limited in life? Why can't you do all of that shit? Why can't you own apartments, a trailer park, a storage facility, 2 businesses, write a book, have a television show, do a podcast, and trade stocks? Why can't you do all of that shit at the same time? Like, why can't you trade crypto, bonds, gold, and stocks? Why are our brains so limited that we feel like we can just do one little thing? Like, oh, I'm a day trader. That's all I do. Really? Well, I also like buy and hold dividend stocks. I also flip houses. I also flip land. I also buy, like, why are we limited in this world of unlimited opportunities? Why do we got to be in one side or the other? Why do we all vote just one part? Like, why do we do? I don't understand it, man. Like, why can't it be everything? So if you look, what we're seeing here. Now, we had a chance right here. And look where it stopped, dude. I want you to catch, this is crucial to the money flow. Yeah, the guys that ask Tesla questions are just dipshits. They're just wanting, they know I don't like the stock, so they always want to ask the question. It's like he's like 14 in his mom's basement, like giggling. Let's upset Gerald and ask him about Tesla. Like, that shit is funny. Look at what we're looking at here. So if we're looking at the pattern, the sideways up, sideways down, sideways. Now, like I told you, they're not all going to be perfect like Groupon. It's not, you're not going to see, now we want them like that, but they're not all going to be like that. So some of them we got to step back and just see the big picture, and you go, okay, I see it. Sideways, below the 20, that was stage 1. There's the breakout. There's the how do we know this stage 3? Look, RSI went extreme, price went sideways, and then it broke down below the box, okay? It went down, 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 and then what? We got extreme. See it? We got extreme, and it started moving sideways. Right? So as I'm looking at all of this, and there's my support, it tried to break out, and it failed. And it came back down. What is it that it makes that made me really, really like this. One of the most bullish things you can have is for a box to be broken. We saw it right here. And the next day it turns right back around and comes back into the box, making the box in effect this area in here. When that happens, it's super bullish. Not 100%, but it's often very bullish. Boom, boom. And I'll show you another where this happened. And so then our target, this is too close. So our target becomes up here. So, yeah, I don't take days off are for girls. All you guys that taking days off, that's for girls. Why are you taking days off? Let's pull up CBay. Did that offend you, ladies? Then don't take days off. 102% upside. $11. $11. So as I look at CBay and see $11, whoa. $11. Shit, I only need $9.75. Matter of fact, my first target's only $7.25. So you see how as I step back and I came across this stock through just reading, research, just through my normal, and I look and first thing I notice is the big pattern. I noticed support was broken, and I'm always looking for these ones that had a box, tried to break out, failed, and then came back. These are super bullish. I don't talk about this a lot in the book, which is why I do this training, because I can just keep adding to the book, and pretty soon it's 400 pages, okay? Nobody wants to read a book that's 400 pages. So we have to take this shit in bite-sized pieces. So when you get a failed breakout that falls back, that then comes back, this makes this zone super, super important. Notice over here you might have called that one, but then it came back, didn't really do it. This never really got back in there, in that zone. And it's going to take you a minute to see these, man. In getting all of these, woman's work is never done. These extreme prices on your RSI are going to give you more indication. Meaning boxes that happen on an extreme RSI are way more important than boxes that happen in just regular price movement. Meaning, ideally, I really want to see some extreme price drops. You're not always going to get that. You know, let me give you an example where you didn't get that. Uber dropped, broke support. Right? Big stage 4 decline. I actually cut it back on this day. We'd had massive gains in this stock. And then look what happens. The next day, right back into the box. And then it just takes off. Super bullish when that happens. New trade, we were doing Romeo Power. I probably jumped the gun in this a little bit, so I may pay a price for that little mistake. I'll put it out there. It was a mistake. It's right on the edge. Like, so there's support, right? This is the box we're trading in, right around in here. I mean, this is too high up. I think you got to take it down into like here. So we're trading in this box here. It broke it, started coming back, and it got right to it. And I jumped thinking it was going to get it, and it didn't. So I really need this to get back into this box. If it gets back into here, this is super bullish. Maybe I jumped the gun on this because it technically didn't get back. I mean, it did for just a second, but it didn't hold it. But it's really close. So I don't mind giving it a benefit of the doubt. I don't have a full position on yet. And so what are we trading here? Look, big ass breakout, runs up stage 2, pulls back, goes into support. So this is a giant stage 1. And what am I looking for? A breakout to run. Where's the previous high? Right here. Right up in here somewhere. See? We got the same pattern we were playing on. You got Polo, same pattern. Right? Except we were doing it back over here. We've been in this one for a while. You want to try to stay with these same stocks. Where it broke out and ran, put in a stage 3, does a stage 4 pullback, breaks out again, runs, It's not the best pattern here, but we've been in this one for a long time. These runaways are not going to give you the full effect of the 4 stages like we see on the chart. They're basically going to give you this. When you see the runaways, they're basically going to give you this. And you're just going to keep seeing this over and over. And if they dip at all, they barely dip. An example would be Tesla. An example would be what we've seen the run recently in Bitcoin. And I think if you see what I'm saying, like, okay, you get your sideways, you get your breakout, you get your sideways, and the pullback is tiny before it does it again. Sideways, breaks out, pulls back, sideways, breaks out, pulls back, breaks out. See what I'm saying? You're only getting one side of the pattern. And as long as it stays above this green line, and we know this is a growth stock, it's perfectly fine. Trying to wait for this to pull all the way back to an extreme RSI, it may never happen. So as you follow the flow of these stocks, you got to know what kind of stock you're trading, and maybe it's just not going to do that. And so each little breakout above the green line is a new stage 2 run. These are called runaways. I got a video on this in the boot camp. This is not going to be Coca-Cola. Coca-Cola is not going to do this. This is going to be an NIO, a Tesla, a Snap, Pinterest, you know, these kind of stocks. You know, real momentum stocks like let's see. What's I'm trying to think of a good one here for Snap was a good one. Just a quick example though. We first got into Snap. You can't see it on this chart here. We'd have to back it up a little more. But it had gone into a stage 4 decline and then was going sideways. And there was our breakout, right? And we ran. And then if we came across, there was a previous high. I don't know if you remember, but that's where we sold some. And then it just keeps ripping. Pulls back. Well, look, it's not doing these deep pullbacks. It's just doing one side of the trade the whole way up. It's just doing the left side of the pattern. And how do you know that? It just doesn't sell off deep before it starts to break out again. And all you can do then is just play the breakouts, man. Play the breakouts. Just keep playing them. And those are runaways. You'll get the same thing to the downside. So if you get a stock that fall, like we had this in marijuana stocks for a while, they would start to go sideways, sell off. Start to go sideways and you think, okay, cool, we're going to get our breakout, sell off. Start to go sideways and you think, oh, okay, we're going to get our breakout, sell off. Start to go side, and what are you getting? You're getting the right side of the pattern. And it's just stage 1, stage 4 decline, stage 1, stage 4 decline, stage 1, stage 4 decline. We saw it in oil. And in all of these consolidation zones, there was no catalyst to take it higher. You know, there was just no catalyst. So, and you know, when you get runaways, it'll be the opposite. And so identifying those, these are no-brainers. You just let them run, right? You just leave them alone. Just let them go. You want to take your profit like you were supposed to, take some off, and then just leave them be, man. Just let them go. There's nothing to think about. As long as it's drifting higher, let it drift. The worst thing to do is like, oh, I should have kept all my shares. No, you shouldn't have, because you didn't know this was going to happen. You didn't know it would just keep going and going and going and going, you know? I mean, so here's one doing that right now. Bingo. We got into bingo right here, like at 50 cents. And it exploded up, dude. And look, I haven't done shit with it. Why? It just keeps going up. So I took money off, got down to my core position. Now I'm just leaving it be. And it appears to be breaking out again. Okay. I mean, it's never given me a chance to get back in or to do anything. It just keeps going higher. So I just let it go. And I move on. I just move on to a different stock. I mean, you just let this go. Your account balance will keep going up. Don't overthink it and go find something else, man. And if you look, this is the left side of the pattern. It's all we have right now. It went sideways, it exploded up, and now we're just drifting higher. You might have called this, I mean, I would have. This was a stage 3, right? And you could have traded this, I guess. I usually just let them go, man. The move's been so big, I just let it keep drifting. We saw it in, let's look at Ethereum. So you crypto guys, my man says, does this work in crypto? I don't know. Let's see. Let's see. Does this work in the world of cryptocurrencies? Let's see. Well, we got a big-ass stage 4 decline right here. And we don't get price going sideways till about right here, right? And man, that thing went so far down, it just jacked up the thing. But we got our stochastics breaking out right here. So we got our sideways. There's our breakout day, right? Price above the green line. And then we ran up. A little pullback here. I wouldn't sell that. You don't have to sell that just because we're still trading over here on this little breakout. You know, the only problem with cryptos, it's hard to value them, right? Breaks out again. And as long as it stays on here, there's nothing to do, right? Goes way up here. So, you know, do you take some off when it hits extremes? I mean, I would, I guess, if you're swing trading it. Goes back into a stage 4 decline. Where's it stop? Right at support. Takes a minute to identify that, right? We got to start waiting until we get sideways movement, which happens right around over in here, which is where we got long Ethereum, if you trade with me. And then what? We get our breakout. It breaks out again and again. Where's our target? Right around previous, right up in here. So, but look, it's not even extreme yet. So yeah, works pretty good with it. Bitcoin, same thing. GBTC, same thing. Looks just like the snap. Looks just like the snap chart, right? Broke out, up it goes. A little bit of a pullback, stops, breaks out again, up it goes. So yeah, I mean, again, well, all you're seeing on that whole run there is though it's just the left side of the chart, man. You're just seeing the left side of the money flow pattern, and you got to be able to identify that, what you're seeing. So you're seeing a runaway, right? You're just seeing the price go sideways, break out, starts to go sideways, breaks out, starts to go sideways, breaks out. And it just keeps doing that, sideways, breaking out, sideways. So you got to be able to identify that and say, okay, I got a runaway here. If you got a runaway, then you need to kind of be careful how you handle these little breaks under the 20, like give them the benefit of the doubt. But let's look at, that was probably confusing the hell out of people right there. Look at H&R Block. This was one of my trades of the week, right? Why? The pattern. So as I step back, I could see the pattern real big, right? I could see it. Sideways, up, sideways, down, sideways. Now, it got a little funky in here. It got a little funky in here. Maybe if you were in the trade over here, you got out over here, would have been nothing wrong with it. But I'm looking at it from a big picture, and I'm seeing the stage 4 sell-off, right? And then I'm seeing it start to go sideways. So right around in here, I've got a box, and it's confirmed by the histogram. It's moving up. Everything's rolling over. Stochastics comes out. Look at it, all this shit lining up right on that day, which is the day that I said, hey, let's buy H&R Block, right? Did I know for certain it's going up? Nope. But let's come over here. That day, the price was $15, right? Give or take. HRB, what were analysts, people smarter than me, thinking it was worth? They thought it was worth $21. And that was the same price then, okay? It's a couple weeks ago. Cool. It's tax time. I got that. So I'm using my brain. Seems like this is a good time for this business, right? Sounds like a good time. I got my pattern. It's an undervalued stock. Stock I understand. I understand the business. Everything's lining up. No-brainer trade. There's my box. There's my breakout. I buy some more. Where's my target? Previous high. Bam. Hit it there. And we hit the extreme RSI. So on this day, we hit our target. On this day, we hit an extreme RSI. And now what are we doing? We just hold the rest. Why? It's just marching higher and higher ever so slowly. So I just am going to let it drift. There's nothing to do. Get it? That was a planned out trade. We saw the pattern. We found an undervalued asset, meaning a business that was trading below book, not book value, but below value, according to analysts. We see the pattern. We have a trigger, an entry. We have a predetermined target, two of them, previous high and the RSI, right? So if it tags it, you don't have to ask, just do it. You know what to do. Previous high and the RSI, hit bam, back to back. It don't normally happen back to back like this, right? Now what? Now we're just drifting higher. What do? We just let our shares drift. So I started out with like 200 shares. Now I'm down to 100 shares. And I'm going to let those 100 drift. It could drift to $500. I don't care. I got my money. I hit my targets. I'm taking my money, and I'm going to roll it forward into new trades like CBay, Merck, these other ones that I'm showing you. So I'm managing a portfolio of 25, 30, 40, 50 different trades where I'm trying to snag the profits and roll them into new stage ones. Coke is a new one, but it's breaking out now, right? There were other stage ones that we were looking at buying. Man, my man says BKH looks like a good example. So let's see. Oh, also, my friends who asked, does this work with options? Yeah, I bought call options right here. Why? Because they were cheap. Where did I sell them? Right here. Made 170%. On the common shares, we're up 20%. On the call options, we're up 150%. But don't ask me to teach you options because I won't. Let's see. Because most of you don't know enough to even be fucking doing options. Most people who are doing options shouldn't even be doing them. They don't even understand price movement or what PE is or how fucking dividend works or the history of the stock market. They're just degenerate gamblers. That's the truth. Most of you guys doing options don't know what the fuck you're doing. And if you'd stop and learn price movement, you'd be a much better options trader because then you would know when to buy options and when not to buy options. And once you understand price movement, then it helps you, you know. Like a bunch of call options on Coke wasn't a bad idea. Right in here. Very simple stock, very easy. Probably not going to bust down. Now it's moving up. You're going to make 50, 60% on your call options. You close those out and you let the common shares drift, you know. Merck. Some little bird may have told me call options on this might be a good idea. We're buying them cheap. Company's worth more, starting to go sideways. Maybe I haven't bought them just yet, but maybe I got my eye on that, right? If this is a bottom. So if I'm going to buy calls, I want to make sure the downside is taken care. Like I'd like the downside to be done. Make sense? Like why do I want it to go down if I'm buying call options? So if I could get it and the downside is exhausted and price starts going sideways, I mean, what do you think? Good time to buy call options on Groupon. You think it's up here or down here after prices sold off and started going sideways? Where do you think would be a smart place to buy them? So when they say, does this help with, I mean, like the fact that you even asked a question tells me you shouldn't be trading options. Just my two. But again, I'm just trying to help people make money, not lose their money. So what did my man say? Be okay. Is that what you said? No, you didn't say be okay, man. I know that wasn't what you said. Let's see. Don't drop tickers and they're not good. Oh, BKH. My bad, bro. BKH. No, that's a shitty option, bro. I don't like this at all. Yeah, so MVT is one we've been in. My man's in it too. Maybe with us, I don't know. Sometimes if I act like I don't know you, it's because I don't know you by that name. Because sometimes on Instagram, people have one name. In my trading group, you have a third name. And then on the thing, there's another name. Ooh, yeah, this is stage one. We got shellacked, though, on Friday. What do I do in this situation? This is a stage one, though. And we'll look at a couple of these. This is what we're looking for, these big sell-offs that tend to put in a bottom. And again, the strategy is not perfect. So it's easy to show all winners and ignore losers. That is breaking the box here. But whenever I'm buying a stage one, I'm nibbling. And typically, I don't sell these if they break down. Why? Because I didn't have that big a position to begin with. And this is why I don't teach the stage one in the book, because the most dangerous of buying is when it sells off and starts to go sideways, because the sell-off may not be done. When we get a breakout, we have confirmation that price wants to go higher. When we have sideways, that's not necessarily confirmation, but it is the most lucrative trading, meaning you're literally trying to buy the bottom. So if that happens, usually I will not sell it if it breaks down. Okay, I kind of knew that going in, because often it'll come right back, which is super bullish. So like say tomorrow this comes right back into this box area, super bullish on MVT. So let's put MVP in MVT and see what the brainiacs think it's worth. Oh my God, $42. $42. Nice. Shit, we're at $22. Huh. Right? So that you can see why maybe I'm in this. Another one is SPRT. Oh no, SRPT. Look, big shellacking. Don't buy the first day. Let it go sideways. Get your box. And now what? We're building this box moving sideways. When you get this, you see how wide? Now we're getting into the advanced shit. Now I'm just throwing boot camp training at you for free. Let's see. When you get into this wide, nothing good's happening here, okay? When you have, this is a jacked up moving averages. All good things happen when they come together. All moves start when they come together. Whether we're looking at SRPT or whether we're looking at, Bitcoin. Look, when they come together, that's when all the big moves happen, okay? Not when they're all spread apart. It's when they all come together. You see it here too. So when you see a stock like this, this is telling you you have plenty of time. So there's no urgency to run out and buy anything. You can give it time to develop, and that's what we're seeing here. This base is being formed. So if you weren't in this, now's a great spot. So you come across stocks like this. Look, what is happening here? This is being repaired. Go look at a chart. You don't see spreads like this. It's got to be repaired. And price, it takes time to digest this. And as these start to come together, shit starts to make more sense. So just tidbit. And when your prices get this far apart, they don't stay that way. It's like a rubber band. They come back to the 20. Prices don't stay away from the 20 that long, man. That's why we use the 20. It's so important. So when you begin to combine the 4 stages of price movement, you see it here, stage 1, stage 2, stage 3, stage 4. Now we're in a stage 1. See it? They don't all look picture perfect like the book. Stage 1, stage 2, stage 3, gigantic gap, stage 4. Now we're in a stage 1, right? Building a box. What we're hoping for is a breakout that runs up. Where would be my target? Usually when I got a giant gap like this, I use the bottom of the gap. Right around in that zone becomes my target. That's how I normally do it, but also we use the RSI, right? So don't forget about that. But you see how I'm dissecting that. And then I got to go see, is this stock even worth money? There could be just because it drops big, it doesn't mean it's a good opportunity, right? We got to make sure that it's actually worth what the fuck it's trading for. So we could come over here and put it in SPRT. Or is it S? Why do I keep doing this? SRPT. Wait. Come on, Joe. SRPT. So they got a 128. 41% upside. And that's just a general average of these analysts. And you can go see who they are, what their rate. That dude's got a cool hat. You can see what their percentages are and dig into that. You can follow these guys if you have tip ranks. You can follow their analysis. So yeah, 142 right up here, right? Remember what I said I'm looking for? What am I looking for? Right here. 125. He said, what's that site showing a dollar value? Man, you're just trying to get everything from me. Just greedy bastards. Just let me just suck all the knowledge. Just suck it out of him. It's called Tip Ranks, man. But there's a ton of sites that do that shit. Ton of sites will tell you value of stocks. Shit, you can probably type it in Google and somebody will tell it for you for free. It's not like it's a secret. Price of values of stocks are not secrets. It's all general accounting, man. So, Twitter. It's one of my favorite trading stocks. Back to what I was saying. One way to improve your trading is to stop looking for stocks. Put about 50 into your thing. And people always ask me that, how do you find stocks? They're all around you. Just name off 50. You know 50 stocks. Put them all into a folder. So you can do that on stock charts. This is stockcharts.com. And for a couple months, just trade those 50. You don't need to look for any others. You'll get plenty of opportunities. So is this a secret stock that nobody knew about? No. How could we ever know about Twitter? It's such a secret. So if we look and we go, man, look, sideways, sideways, all big price moves come from sideways action. So if we trade Twitter and we respect the RSI, I mean, how could we ever know about Twitter? This is a secret stock that nobody knows about. And we see the stage one, see them? Stage one, stage two breakout, stage three, stage four decline, stage one, see it? There's the pattern. I mean, how could we ever have known to do it on Twitter? How did I know to do it on Twitter? I do it on Twitter every day. So I follow this stock every day. I don't need to do any research. I follow it every day. This is a trading stock of mine. Okay? Exactly. So when a guy goes, well, how do you know what stocks to look for? You're holding one in your hand. You're talking to me on it right now. You're messaging me on IG, which is owned by Facebook and Apple, and probably using AT&T. Like, they're all around you. So you just start following them. Just put them into a folder. So Twitter is one that I trade all the time. And it tends to respect the money flow. And I move in and out of it. So I like to buy a whole bunch of Twitter on stage ones, and I like to sell it off on stage threes, holding a core position and then buying it back on the stage ones and letting it run up and selling. There's my target. I sold some. RSI hit. I sold some. Now what am I doing? I'm just letting her drift. Just letting her drift. Same thing we talked about. And every so often you just catch a runner. Did I know this thing would go to 71? I had no idea. Now, I know there's a bunch of people tell you, oh, I knew Twitter was going 71. I didn't know that. I don't know where anything's going. You know what I mean? I don't know where anything's going. I'm just following a pattern. So as I sit and watch, this last one, I mean, this was the most obvious money flow pattern out there. Look at that. So if we're looking at the pattern, there it is. And it was a secret stock that nobody knew about, Twitter. I mean, how could you know about it? You get what I'm saying? Like, you don't need secret stocks, man. You don't need to be like, oh, I got to be in GameStop. I got to be in AMC. I got to be in marijuana stocks. You don't have to do that. You could trade your game. Ain't nobody on CM. Nobody's even talking about this stock. It went from $45 to $71. Nobody's even talking about it. And you're like, well, could this help me with options? I don't know. If you bought call options on stage one, could that help you? I don't know. If you bought call options on stage one, could that help you? I don't know. If you bought call options on stage one, could that help you? I mean, yeah, it helps with options, man. Price movement's what options are all about. It's so weird to me when I get asked that question because it's like, I don't understand it. Like, of course. It's price movement. It's price movement. Yeah, so Clarity just asked a question. I should yell at him, but I like him, so I'm not going to yell at him. But he made a good point. So like I did a trade in Merck. So chances are Pfizer looks very similar. And it basically does. Not the exact same. Not the exact same. But it's sold off stage 4 and now it's stopped. It's building a box, right? So Pfizer's setting up. Here's a box, stage 1. And you know, I mean, it's not exactly there yet. That's why I didn't buy it. It's running a little delayed. And so, you know, these are the big three. Let's look at Bristol Myers. I like the Bristol Myers chart too, though. Matter of fact, I was kind of going back and forth with people on this. Are we doing Bristol Myers or are we doing Merck? Because they're both setting up the pattern. Right? You can see it. The Merck, this is Bristol Myers. It's real boxy. Sell-off wasn't that big. You see where it stopped, right at previous low, right? Same thing that Merck did. The reason I liked Merck is it fell below the 200, which falls into my bread and butter trade, which is a high dividend stock, quality dividend stock that falls below the 200. It will go to 79. I mean, I call it the bread and butter trade. I like to do these in my buy and hold. I'll buy a shit ton of it, and with the idea of selling it off right here, the 200. You know, will it get to the 200? I mean, look, dude, it goes to the 200 all the time. Look, I mean, it just lives there. To ask for it to get here is pretty easy. So that's what I call a bread and butter trade, meaning it's super simple, super easy. I would not trade this on a low dollar account, right? You're just not going to get that much bang for your buck. That's why I like penny stocks, things like that for low dollar accounts. You need things that are going to move, you know? This is not a low, unless you're just practicing or learning, you know, you want to trade high dollar stuff. So if you notice, Pfizer stopped around the 200, Bristol Myers stopped around the 200, Merck did not. It went below the 200, stopped right at support. It's, you know, it activated the bread and butter. Also, this is a dog of the Dow stock. If you've read my free ebook, You Don't Have to Die Broke, this is a dog of the Dow stock. So we got the dogs of the Dow theory. We got it trading below the 200. We got stage one of the money flow, like trifecta, all the things that I look at. Yeah. Now, Pfizer it's just not quite there yet. I'm sure it will be. I mean, technically it's back in the box. And technically it's ticking. I don't know. Chessboard is pointing down. It's there. It's forming the box. I would go ahead and just call it a stage one. I just don't know, you know. He said my cut list. I don't know, but it is a stage one. Pharmaceuticals have been hot right now. I'm trying to think. Extended charting hours, pre and post trading sessions now available on Sharp Charts. That's kind of cool. Look for BAH. Yep. Booz Allen Hamilton. Similar pattern. See it? Now, this is a short, choppy pattern. Sideways up. But that's still a $10 move. And then huge down. And then we're on the 200. So if I was looking at this, yeah, you can see the pattern. It's kind of short. It's respecting all the points that I like to see. It moves sideways, then it breaks out. The RSI hits extreme, it sells off. So I like all that. We got a solid box going here. Let's put it in the tip ranks. They got 101 target. We only need 96. Yeah, that's a trade. Then you got to now you got to decide, okay, is this the one that I want to trade? You know, if you're trading a small account, this is not one I'm going to trade. So you buy 10 shares, you turn $82 into $960. You know, you made $100, $150. You could make way more than that trading, you know, smaller cap stocks, man. So make sure you adjust your account to, you know, Like, look at this one. This is one we were trading, and we were buying it down here for like $2, RMN and I. Now it's $8.50. So that's turning the same, that's turning $350 into $850. This is the possibility with small caps. The problem is they go the other way as well, okay? So you want to make sure the market cycle's set up for you to be trading these. Like, they're hot. You want them to be hot. DS is one that I've been trading. I was asking everybody to buy it around $1, shot up. We went all the way up to like $3. Took some off the table, it pulled back. Look at this big sideways. I started buying more, popped, started to run, and then they did a secondary offering, pull back. As long as this zone holds, I'm fine with that. It ain't no big deal. They needed to raise money, I get it. So look, that support is held for months. So began buying more in here, and I expect this is going to resume and price will move higher. I use the daily. There's really little reason to use any other. I know my friend Ashton drops down to a 5-minute chart. I see no reason for that. Literally zero reason to go to a 5-minute chart. I know you guys will be like, yeah, but I'm trying to catch the breakout, like you're wannabe fucking day traders. So you could go to a 5-minute chart here. It does zero good. I know you think it does something, but it doesn't. You're like, oh, but it's breaking out. Yeah, no shit. I saw that on the daily too. Like, I get it. This is a 5-minute chart. So the problem is when people drop, if you're really experienced, I know you can make sense of that. But when you start doing this and you're a new trader, you got a stage 4 decline right here. And yet when you go to the daily, you're not in a stage 4 decline. So there's no reason for it. The only time I'm in an uptrend. There's nothing to do. Like, what do you need if I can go to see any, shorter time frame? I don't get it. If, like over here, if you catch the breakout here and you're just ticking up, why look at it? Just let it go. Like, let it go. It's going up, There's nothing to look at. So, if you drop to a 5-minute chart, this bar here could cause you to sell the damn stock, or a 1-minute. So I don't know, man. I don't get it. I know Ashton likes to do it. I don't see the value in it. I know sometimes people they're looking for these support lines. They're trying to catch breakouts, and I don't know, man. I got other shit to do, like buy real estate and things. I can't be watching a 5-minute chart. Let's see. Yeah, there's people that trade on a monthly chart, though. I know a guy trades on a weekly. The money flow works on a weekly. You can go to a weekly. It works on any time frame. Yeah, there's your breakouts. It runs up. You can do it. Yeah, XL is one I'm watching right now. I almost took a position in this in Friday. I probably should have. I like this chart, though. And this is one I almost bought on Friday. We were talking about it, and then I got sidetracked. This is one I may actually buy. So let's put that in up here and see what the target is. $30. Yeah, it's about where my target is. See the support? So yeah, the left, there's the stage 2 run up, right? Pulls back. And this is about as deep as the pullbacks go, and now we're going sideways. This is where all the moves start, either up or down. They start to go with. That's what we have here, GRFS. Okay. So it's coming into a support zone. Now, I would never buy it here. But look where it's stopping. So if I got one candle that ripped higher, I would definitely take a position. Why? Because we can add these to your candle count over here. You know how I talk about 4 candles? If you have solid support, you can add them to your candle count, almost like a card game, right? really need to see this ticking over. Stochastics hasn't broke out yet. It's a little too early, man. But this is one we'd be watching, right? So let's see what it's worth. Wow. $36. Maybe you write that one down. Oh. My man said chewy. I'm sitting here with a cat that's fucking annoying me. I think maybe we feed our animals way too much. We should feed them less. I don't know if we should make it easy to feed them. Chewy's already broke out though, man. Unless it pulled back tomorrow, I wouldn't buy that. Like we got into open, it's breaking out. Yep. I don't know. Oh, you're talking about the GR. Let's see. Yeah, you can add to the candle count if it's on a solid support zone, though. It's got to be a solid support zone. My man said XBI. Yeah, man, but, I mean, you should have bought it back here. I mean, it's already breaking out. You want to buy it when it breaks above the 20. And, yeah, trading, you know, you can trade index funds. Like, I mean, that's what this is, an index fund. But you want to buy the index fund on the breakouts, man. Price breaking above the 20, right? Breakout, breakout, breakout. Now, what you want to notice, look, prior to every breakout, you see in these little boxes. So if you learn my boxes and the 20-day moving average, right, and how all these jive together, you know, you can trade all of these, man. Like, and this is another one. It's only doing the left side of the chart. It's just a runaway. Yeah, DS is a stage 2 breakout right now. Wow, look at this. And then that break right there. When that came back up into the box, this is what I'm talking about. Breaks the box, comes back into the box. This is super bullish because of this. It had stopped, started going south, and then it broke again. But when it came back up, that is super bullish, man. Why, that's confirming this box. I don't really like the chart pattern, though. I mean, I don't like the way the chart looks. DSS. What do they say it's worth? No, that ain't right. DSS. Man, that's right. They don't even cover this stock, man. There ain't even no analyst covering it, dude. I don't know, man, unless you got some inside information on this thing or feel like it's... I don't know, man. It's too a little jumpy for me. Let's see. AMC. Huh. Yeah, this is not a stage 1 yet. It's trying to form a stage 1. It is interesting where it stopped, though. This is AMC. It stopped, you know, kind of in this previous zone. That was a resistance level. I don't know, man. Everything's still pointing down, though. You need the momentum to click this way, and I'd like to see stochastics really turn out. You know, the breakout days are confirming the boxes. I mean, you're still under it. So this, how I use stochastics, I don't talk about this in the book because it just tends to confuse people, man. But on this Chess, what I'm really looking for is where price breaks out. Once you go in, you can stay in for a long time. We're in right now. I need it to turn, and it typically turns confirming the boxes. Same to the downside. See, when it turned down is on that day, which triggered the big downturn. Yeah, I don't know, man. Why are we fucking with AIMS? There's so many better opportunities, man. This is just a shitty company that's going out of business. Maybe not. Maybe it survives, but I don't know, man. Oh, you guys are just trying to get a car like Chris. Let's see. TLRY. Come on, man. What are we looking at here, man? Why are you wasting our fucking time, man? Scott, why are you wasting our time, bro? What are we supposed to do with this shit? Are we supposed to buy it here? Are we going to buy this stock here? Everything's pointing down. Is that what you want us to buy, a stock going down? Let's see. We need to talk about it over here. It's too late for us to do anything right now. Maybe if it stabilizes, but there ain't nothing to do. Hopefully you took some money off the table. My man Alfred, he just asked the whole goddamn class we just gave. How do you decide when to put money on or take money off? Well, don't listen to news, bro. Like, if you're selling stocks because of negative news, you're a dumbass. Like, seriously. Don't sell a stock because of negative news. Don't do that. News is often lying. So, first thing I do when a stock gets hit real big is I don't do anything. I just wait. And then I go look at the chart and I go, oh, you remember that thing we call support and resistance? Well, look, there's resistance, which becomes support. This is why we didn't sell this, because we were buying here. And when it got hit on the news, why did I not sell it? Because a lot of people ask me, why aren't we selling this? Because if you've read the damn book, support and resistance is part of the process, right? And because this had been a resistance zone, I'm going to give it a minute to see if it holds as support. And if it does, then, we're waiting. We're going to wait, and we're going to give it a minute. And we're going to see if the news is legit. And then we're going to wait. I don't like to get shook out because of lawsuits or news. Companies get sued. I mean, if you're not getting sued, you're not doing anything. That's just reality of life. Now, obviously it could keep going. That could hurt you. But anytime I have a support zone, almost anytime, I don't want to say not everything is 100%, but I'm looking to give trades that I get into the benefit of the doubt, or I didn't want to buy them. Meaning not one day can't completely change my mind on a stock, or you didn't have very good convictions on that stock, Like, what do we think Clove is worth? Let's see what Clove is. Put in the right thing. $17. According to Citigroup, they rated it 12 days ago. JP Morgan has a hold on it at $15. Yeah, so I'm not selling this right now. I'm not selling this right now. It is in a stage 4 decline. Hopefully it's going to hold. We'll see. You also want to give the benefit of the doubt to the guy that runs it as a billionaire. So let's give that a little bit of benefit of the doubt. But It is concerning. But to answer your question, how do I determine it is, it's based on if the stock is undervalued or overvalued. Is usually how I look at it. And then I'm looking for support and resistance. If there wasn't any support here and the next level was way down here, then I probably would have cut it. So I'm looking for levels that price may hold up there, and I'm going to give it the benefit of the doubt of holding up. That's a good question, man. It says if two stocks with a similar chart, which they will be similar because they're in the same sector, like AUY, right? I own some AUY. We got AUY, right? Forming a box. And then we got, what did he say? BTG? Yeah, I think it was BTG. Forming a box. Probably a gold company. Yeah, that's Barrett Gold or whatever it was. We got SSRM. That's a gold company. They're all forming the same pattern. You know, choose your favorite one. I mean, that's about all you can do. I usually like to buy 2, 3, 4 of them. Yep, SSRM has a pretty high price target. I like that stock. We've talked about this stock multiple times. 74% upside, strong buy. So if you're looking for a gold stock, this is one. Hold on. That's one. Yeah. You know, I'm giving gold time here. It's been a frustrating asset. Like, we're long gold. I'm long a few gold stocks, and I'm long silver. Silver looks the strongest right now, so. And, you know, these patterns aren't looking good. We're having to really dig to see the pattern, but, you know, stage 1, stage 2, stage 3, here's our box, and then we're running up. So, I don't know, man. CRSP, yeah, man, that's a high dollar stock, though. I'm in this, and you're right. Broke and came right back. Super bullish. Yeah, I like it. What do I think about it? They downgraded. I know, they downgraded it, man. We'll have to see. Maybe one we end up dumping. I mean, sometimes I get them wrong. It's very rare, but sometimes I do. I run about an 87% success rate, so, which means there's 13 of them out of 100 I get wrong. This could be one. So we'll see. I'm going to give the benefit of the doubt here. It's so close to back in the box. We'll see tomorrow and give it a little time, and maybe we'll cut it or cut it in half. Maybe cut it in half, and we'll give it a down, you know. But someone downgrading it doesn't necessarily make me want to get out of it. It's just one person's opinion. We're looking for the totality. So what did they say on it? But you're right. They did downgrade it. You know, we still got 2 buys. We'll see. Maybe it ends up being a loser, man. Well, he's talking about Morgan Stanley. Morgan Stanley downgraded it. My man says, couldn't stage 2 become resistance for a stage 2 breakout? Exactly. That's the pattern. Exactly. Price has memory, right? So if we're looking at that. So back, for anybody just tuned in, we'll wrap up. I'll go all day here. Ideally, in a perfect world, you're looking for a chart like this one. If you were in my boot camp last time, we got delivered this stock, right? And so what I'm trying to trade is a pattern. And what the money flow is made up of 6 components. The one up here on top is the RSI. And all of this is telling me is when this measures velocity of price, not that price went too high or too low. I'll say that as slang. Other people say it, but that's not really what it's measuring. What it's measuring is the last 14 days of price movement. So if you notice, if you took an average of this 14-day period right here, what has price movement been? Not very much. A little here, a little there, not much of an average. Well, when price kicks off, what is it doing? The average is changing, which is why the 20-day moving average turns up, because the average is moving up. So as we add each day, this is making the average turn. When it goes further than it normally does in a 14-day period, you're going to get what's called an extreme reading on the RSI indicator. These tend to be zones where large companies, large traders start to take profits because they bought in here and now we're way up here. So what this gives us is a systematic way to ring the register without thinking about it. We just do it. And we also use previous high, which is price right here. When these two coincide, RSI extreme and previous high, that is a signal to you price is probably about to get hung up. And if you're a really short-term trader, you just get out of the whole damn trade. I don't like to do that. I'm trying to get rich. So I want to let them keep running. And then look, price starts to go sideways. The same thing that got us in down here, price going sideways and breaking out, could get us out here, price going sideways and breaking down. How far down? We don't know. We didn't know how far up it would go. That's why we use previous high as a target, and that's why we use the RSI as a target, because it gives us a systematic way. So now we have a trigger, we have a target, we've taken chaos and made order out of it, we've given ourselves a plan. It doesn't require a lot of thinking, and as long as we follow it the same over and over, consistency, repetition is the mother of skill. And so as we begin to apply this to chart after chart after chart after chart, and you'll begin to see these, and you'll find these nice flowing patterns like this, you'll know what to do. You'll know I need to buy a bunch here, set my targets, right? Boom, respect the strat. And then as I come down here, just like I got in, this indicator here is called the MACD histogram. Most people probably are used to this. So I keep this on the bottom of my chart so that my charts match your chart. I don't need this little line thing. This is measuring. The MACD is moving average convergence divergence. It is the convergence and the divergence, which means go away from, come together. So remember I talk about this is the money flow 4 stages is moving average convergence divergence, meaning price is moving and then it converges, right? And when it converges, it gets ready to diverge, to go the opposite direction. That's what the MACD is measuring too. And you'll notice the pattern is very similar and yet it's different. So I don't need this crossover. What I'm really watching is the histogram. So I like to plot the MACD without the line, which is what you see here, and I do it in purple. What am I looking for? Divergence, meaning the MACD is ticking up while price is going sideways. Moving average convergence divergence. I'm looking for a divergence. And as price goes higher and the MACD starts to tick down, if we look up here and you see the MACD ticking down, right? What is that telling you? The MACD is saying the momentum to the upside is slowing. You're getting price is going sideways, but the histogram is diverging. Same thing it did down here. Now, it means a lot more to me down here because prices can keep going, even if the MACD rolls over. So don't take this as I got to get completely out. No, it's just saying, hey, if you've made a bunch of money, you better have locked some of that in. You don't need to abandon the trade. Maybe it breaks out again, which would make this turn and break out again. So we don't want to give up on it. This is where you go look and go, what is the value of the company? If it's fair value and the MACD is going against you and you're forming a box coming off an extreme RSI, good possibility we're about to sell off, meaning all 6 of the indicators are lining up. That doesn't mean I got to get completely out, but I should take some money off the table. Why? So that I can buy ones down here, like better opportunities. And so what I'm doing is rolling money forward. I'm managing a portfolio like a chessboard or like a football team. I got some queens. I got some running backs. I got some receivers. I've got some tech, some biotech, some penny stocks, some growth stocks, some dividends, some energy, some oil. I got all these players on the field, all doing different things, all revolving within the 4 stages of price movement, all giving me opportunities. And it gets real fucking simple when you begin to break it down like that with the big picture that over time, stocks, if we go to the dial, I'm going to wrap up with this. Over time, this is daily, but let's go to a monthly. You're playing a rigged game, and the rigged game is it just goes up over time. And if you don't believe that, you'll never be a good trader. This game is rigged. And I hear people say all the time, well, the stock market's rigged. No shit. It's been rigged. Why aren't you in it? Why would you not play a rigged game? It's going up. All of the forces of the world are aligned to push it up. Rich people want it to go up. Governments want it to go up. Banks want it to go up. Everyone on planet Earth wants this shit to go up. Why would you be the guy worried that it's going to go down? So if you walk into a casino and they go, hey, you want to play this game, or we got this one over here, the casino wants you to win all the time. What game do you play? Right? So all you got to figure out, though, is these little dips that happen. And that's just fear. And once we understand the big picture, markets go up 70% of the time, which means 30% of the time, they're going to go down. And they go down fast, way faster than they go up, because people get scared, feared, and greed. Right? And when it goes down fast, we just have to realize at some point it's going to stop. And then when it stops, that's our opportunity, right? And the same in stocks. They move in 4 stages. Inside of the big picture, the markets go up over time. And so all of this is allowing me to do is bring order to chaos, to somehow look at a chart and say, okay, am I going sideways? Am I going up? Am I going sideways? Or am I going down? And based on that, could I go look and see what the value of a company is? And if I'm down here and the value's up here, that allows me to come up with a system, a trigger, an entry, a target, an exit, and a point that says, hey, maybe I'm wrong. And we can define all of that. And that's what the money flow is about. You may run it a little different than I run it. It can run different for different people because we have different views and we have different beliefs on things. But the stages are the same. And what I mean is, I may hold a stock into a stage 4 decline. Why? Because I think it is stupidly undervalued. So when it sells off, I'm not selling it. I don't have to sell. I'm not so fucking weak-minded that just because a stock goes down, I have to somehow respond. I don't have to fucking respond to anything. Like, I can just decide to hold it because I know the value of the business. Like, I went and researched it, and I have enough mental fortitude that just because it goes down, I don't have to sell. That doesn't mean I can't look at the chart and go, yeah, that's a stage 4 decline. Guess what? It gives me an advantage. Now I can wait when I buy. I wait for it to stop. I watch it start going sideways and I buy more. So if Bitcoin starts crashing, I don't buy any. I just wait. I wait till what? It stops. And when it stops and starts to go sideways, what do? I start buying. I don't have to sell just because it goes down. Most people think of trading as every day you're responding to every little fucking tick in every news story. That's not trading. That's being manipulated. You don't have to sell because it goes down. Now, if it's an overvalued company, what sense does it make to hold it if it's going down? So if you're trading a stock that's probably overvalued anyway, or the value, it's fair value, you could hold it if you just like it, but there's not much opportunity there. Like, what are you going to, I guess you could hold it and build it up at the bottom and just keep doing that. But I'm looking for shit that's going to go up, really up, far up. Makes sense? Man, come on. When you step back and see the big picture. Now, some stocks, a penny stock, I'm probably going to get out of it over here. I don't want to ride a penny stock down. I don't want to ride it up $8 and ride it down $9, right? But that's not Tesla. That's not Uber. That's not like a million stocks that you can learn. And so you can use the money flow as a way of building your position. And then when it sells off, go, cool, okay, don't do anything here. Let's wait until it stops. And then we start building the position. And then, you know what I'm saying? And then when it runs up too high, we take a little off. Why? So that we can build it back up when it comes down. Because they don't keep going up forever. They go through all stocks go through the 4 stages of price movement. All of them. 0. All of them. I don't give a fuck what stock it is. At some point, it'll sell off, okay? You just got to be able to identify, is this a runaway and it's not going to give me much of a dip? Or is this, there are those stocks. So we got to break those down. But that's easy. They're easy to catch. It's easy to know. Hey, I hope everybody has a great, happy Valentine's Day. Appreciate all the birthday wishes. If you don't have my book, grab a copy. That'd be a great birthday present. I'm sure it'll help you. Even if you just get 1 or 2 things out of it, I'm sure it'll help you. You can hit my bio link up there. The newsletter's free. Almost everything on there is free, man. Just hit the bio link, whether you're on YouTube or Instagram. It'll take you through it, take you down the rabbit hole. You guys be good.